What's up, everyone? It's Karthik with MoneyVest. So Tesla here ripping over 11.7, almost 12% on the day. Here we are with the market update. It is 3 in the morning here in Dubai. We just wrapped up over a 3-hour earnings call on Tesla, going over the earnings report, margins getting better, revenues getting better, profitability getting better, and of course, investors seem to be very, very excited about the fact that earnings was a huge beat at 72 cents per share. Revenue with a small miss, but of course the earnings call was also quite interesting. So I'm going to be doing a more separate, more dedicated video on Tesla very soon. But with these calls pushing up over almost 12%, I ended up closing out my covered call at 88% profit. So very nice $300 profit on this call. And the portfolio, the options portfolio, now crossing over $100,000. If you want to get access to all the trade alerts, find out exactly what we're trading every single week, link's going to be down below. Tesla, of course, being the majority of that gainer for the day, pushing me back above essentially the first time for this options portfolio to be over 100,000. So options portfolio crossed over 100K. So again, if you want to get access to all the trade alerts, find out exactly every single thing, link's going to be down below. There's a few more spots open if you want to join us. And I can tell you that we've got a lot of really experienced and helpful, supportive traders, investors that can help you in your journey of trading and investing in the market. So we focus on risk first, and of course, the reward will take care of itself. And alternatively, we also have the MoneyVest education tier where you can access all 4 courses if you want to learn how to start trading options. We've got over 175 videos, so you can join over 2,827 members, thousands of very, very experienced traders and investors part of it. So all in all, we actually did see a pretty significant sell-off in the market, apart from Tesla, which was, of course, very, very green after the markets closed. We did have Nasdaq dropping over 1.5%. We had the S&P 500 also down almost 1%. And I also want to address that we now have the MoneyVest index fully deployed into production on our MoneyVest platform. So as you can see under the macro dashboard here, you click on MoneyVest index and it brings you to this page, which is going to tell you exactly what that reading is. We're right now sitting at 3.69, still in optimistic zone for the MoneyVest index, which simply suggests that we are not in that buying window as of yet. The lower this number gets down to, the better the opportunity will be. But right now we're at 3.69, meaning that we're still in optimistic zone for the market. So this is also going to be available for all of you. In terms of the market calendar, again, we had other companies also reporting numbers like IBM, ServiceNow, Lam Research, T-Mobile, Tesla. All these companies super important for the market. But next week is really the next big set of earnings, including the big tech like Google, Microsoft, Meta, Apple, Amazon, Visa, Eli Lilly, Advanced Micro Devices. So all these companies are going to be scheduled for next week. So it's going to be a very, very interesting week for the market. Coming over to market concentration, we had almost a $500 billion loss today, with majority of stocks selling off, with Nvidia being the biggest loser on the day, down over $100 billion, Apple down over $78 billion, Amazon, Meta, Google, Microsoft, every single stock here in the big tech was selling off, and some of the big gainers were the companies that actually reported earnings, like Texas Instruments, AT&T, Johnson & Johnson, Verizon, Nextera Energy, Costco, Walmart, all of these pushing higher. So, we've also seen the 10-year treasuries pushing up to over 4.2.5%. That was the peak for today. You can see 4.250%. So that was definitely a level that we haven't seen in a long time, because if you essentially go over to this chart, you'll notice that we are getting back up to the same level as we were back in July 2024. All in all, we've seen a few peaks that have been lower highs for the 10-year treasuries. So if this continues to go higher, that's really going to be competing against the equity markets, as I mentioned in my yesterday's update as well, because the higher the yields go, the more pressure that's going to put on growth stocks and on technology stocks as well. So some levels to keep in mind: 4.47, 4.6, all the way up to as much as 4.7 here. Very, very important levels, because the higher the yields go, like I said, that's going to put more impact on equity. It's going to put more pressures on the entire technology sector as well, because all future cash flows discounted back to present value are going to be worth less. And as a result, there's always going to be that flight to safety from the market, given the attractiveness towards the yields. Volatility here also popping back up a little bit over 19 right now, so just under 6% higher on the day. And crude oil prices also back up to over $71 a barrel, which is, again, increasing those expectations for inflation in the November print, which if you come take a look at our October essentially monthly chart for the crude oil, up over 4%, and markets are now down on a monthly basis. In other words, October Nasdaq is down about 40 basis points. S&P still managing to stay higher because of the fact that it's a little bit more broad-based rally for the entire market, and utilities continue to lead higher. So if you come over to some sector analysis, you'll notice that we did have real estate and utilities, the two sectors that were green. Everything else was red. So this is once again a market which is very, very risk off. So we're not seeing a lot of risk taking in the market right now. So if you come over to XLK divided by XLU, a chart that I have addressed and talked about on the channel before, on a weekly time frame, you'll notice that this past week, we are once again seeing that underperformance in technology relative to utilities. So that is simply suggesting for the risk-off environment that we're currently in once again. And the markets only go into risk-off when there is a significant amount of uncertainty related to the future outcome. Now we've got elections right around the corner, FOMC on November 7th. So again, if you come over to our calendar, on economic calendar, if you scroll past the next couple of weeks here, of course, next week we've got the unemployment numbers. On the high impact item, we've got unemployment rate, non-farm payrolls, ISM manufacturing PMI, personal savings rate, income rate, core PCE numbers, as well as, again, initial claims, all those things. So inflation and unemployment scheduled for next week. But this right here is going to be the week for the Federal Reserve, which is going to be November 7th is when the next meeting is. So Federal Reserve's press conference and the interest rate decision. And if you go past that week, this right here, 11/13, November 13th is when we've got inflation numbers coming out. That's going to be your CPI and PPI in and around this. Looks like it's coming out on the same day. Might not be the same day, but we're going to have to double check that. But 11/13, November 13th is when inflation numbers also scheduled. So again, markets over the next 1 month are playing it very safe. I think that's what the markets are doing, is playing it very safe considering what we have coming up, and hence the risk-off environment in the markets right now. Now coming over to the S&P 500, so on the daily time frame, we continue to roll over, and as you'll notice that this was the first level of support I pointed out in my updates, and you'll notice that we got tagged at that level perfectly before the buyers stepped in. So if you come over to the 30-minute time frame, you'll notice a very nice rebound from that support of 57.66. This is exactly what we pointed out in our yesterday's market update and all the market updates leading up to this video. But this right here remains a very important support. If you get a breakdown below this, then it's possible that we see 56.70 as the next support for the markets as well. I already want to point out that we're starting to see some lower highs form here. So that's definitely a lower high. Markets all-time high sits roughly at 58.78. So if you point into a lower high here, and then of course a potential lower low, that can be a downtrending channel for the markets that we need to keep in mind moving forward. Talking about the Nasdaq, and Nasdaq also, you'll notice, is still within the context of this downtrend. It actually almost perfectly came down to this higher low. In fact, both of the indices, S&P 500 and the Nasdaq, perfectly validated the analysis that we had on them. It's actually quite crazy because you can go back, check the market updates, and see that for yourself. And you'll notice that this right here has been the rising wedge for the Nasdaq, and perfectly came down. Well, not super perfect, but almost perfect. We came down to this higher low, got a little bit of a rebound, bounce back up. So it's possible that we see that recovery up to as much as 18.6. That's going to be a rally on the Nasdaq, about 2%. It's possible since Tesla's up almost 12% after hours right now. So futures are most likely going to be green at the moment. Nasdaq futures are up 33 basis points. S&P futures up 8 basis points. So still seeing a little bit of that momentum back higher on the back of Tesla. So it's possible that we gap up tomorrow, see a little bit of that continuation because of Tesla, because of some other tech companies kind of following through. But that right there is still going to be that resistance inside this rising wedge. And S&P also making a little bit of a lower low. And there's a possibility for us to gap up and push up to make a lower high. So there are signs, there are some early signs that we are seeing markets kind of show signs of weakness right now because of this risk-off environment. And any type of temporary rallies, any type of temporary rebounds can very much be sold into, considering all the uncertainty surrounding elections, FOMC meetings, unemployment numbers, inflation data. So we do still have a lot to cover on the channel over the next 30 days, including the earnings season, as well as all the economic data that's coming out. So that's going to be all for you today. Make sure that you drop a like and subscribe to the channel if you want to find out exactly what we're trading on a regular basis. And I'm also going to be posting my shopping list before the end of October. So if you want to access all the stocks that are going to be a part of my personal shopping list, highest quality stocks with my buy targets and fair values, link's going to be down below if you want to join, of course, be a part of our community. And you can lock this price in for now, because as we make more and more features available on the platform, unfortunately, the prices are going to increase in the future. So if you want to lock these prices in, link's going to be down below. We'd love to have you on board. If you have any questions, please feel free to reach out. Shorter updates because it's pretty late here in Dubai. It's well past 3 a.m. in the morning, so I'm going to get some sleep. Again, thank you so much. Happy investing. I'll see you all in the next video.